Welcome to India Infoline. I'm Shrikant Akolkar, pharma analyst with India Infoline. Uh, Domestic pharma sector has been under pressure for last 2 years because of price regulations in India and regulatory scrutiny in USA, and owing to which a lot of pharma stocks have become cheap. However, there is a risk of again regulatory action and a pipeline which is probably not firing in a lot of companies. So we have come up with a report, and we see that all these companies that we are mentioning here are having better compliance. They have a good earning visibility over going ahead. Plus, there are opportunities in specialties, biosimilars, research businesses, etc., as well as diversified business in other territories. So we are positive on stocks, and we would like to discuss them. The first stock that we want to discuss is Alkem Laboratories, which is a pharma company from India. It derives most of its revenue and profit from India. Company holds meaningful market share in India in acute segment. Chronic is the latest where they have entered, and productivity gains should improve its margins and PAT. The US pipeline is half of its pipeline is not approved yet, as in it is awaiting approval. So we are positive on that, and all facilities are cleared. So we see that Alchem is around 23x of 20x of its FY20, and we are positive on that. We have price target of 2,551 rupees with 18% upside. The next stock that we have is Biocon. We are very positive on Biocon's research and biologics business. Research has recently commissioned a capex of 100 million, and 100 million of another capex will be commissioned in FY20. So we are positive on research because there are several moving parts, industry tailwinds, etc. The biologics business is at a juncture where approvals are going to be expected over next 2 years, and the launch of trastuzumab, pegfilgrastim, and glargine will be seeing around 3x growth in a PAT of Biocon over the next 2 years. We're positive on Biocon, and we have a price target of 789, which gives 35% upside on the stock. The next stock that we have is Natco Pharma, which has come under pressure in last 2 months because of concerns over Copaxone, but we see that the competition is not expected to the large extent over FY19. There will be one another filer in FY20, which is likely, but we don't see that should erode a huge revenue opportunity of Natco because it is a significantly large product, more than $4 billion dollar sales in FY17. So we see that Natco can generate a PAT of around 1,250 crores over next 2 years cumulatively. We are positive on Natco. Valuation is also attractive. We have a price target of 1,006 with a upside of 28%. The next stock that we have is Stride Shasun, which is rebuilding its US business. It has a 22% market share in US market, and the market is fairly consolidated, so a lot of competition is not expected there. The Australian generic pharma sector macros are also very positive. So Strides, with its long alliances with its partners and plus rollback some of its manufacturing to India, will be very key beneficiary. US business is also at a juncture where a lot of approvals are expected. Company expect to launch around 15 to 20 products in both territories going ahead. Plus company has done a lot of restructuring, has divested or sold its business. So margins are going to be improving over next 2 years. We have a buy on Stride Shasun with a price target of 960, implying 39% upside. And then we have Syngene International, which I discussed earlier, is a subsidiary of Biocon, which is in research business. The industry tailwinds are very positive for CRO industry, and Syngene will be beneficiary because company operates at around 20% cost to what the US scientist in a pharma company would work for. So this is very positive because the budgets of a lot of pharma companies in US or Europe are under pressure because of the patent expiries. So they want to optimize their R&D, so they are outsourcing their business to companies like Syngene, which will be beneficiary. And again, this is a full service CRO, and they are also foraying in formulations, so the entire value chain will be beneficiary, and that includes Syngene as well. So we are positive on Syngene. We have a price target of 658 rupees, which implies a upside of 20%. Thank you.